on the session today. A pretty good one.
A good day, but a pretty topsy-turvy day. In the end, up by 0.5%. Very early on in the session, we saw the market reaching a fresh 2012 high, the highest level that we've seen in 17 months. But the next 48 hours is really going to be around these negotiations on the fiscal cliff, and the countdown really has begun there. If we have a look at China, there were some reports that Chinese growth would target 7.5% in 2013. And I think that put a little bit of downward pressure in terms of the gains we saw earlier on in the day. But then the World Bank also came out with its forecast, and it's actually raised its forecast for growth in China from 8.1% to 8.4% in 2003. There's quite a lot of interesting movements in the financial space. A yellow brick road went into a trading halt, and that follows on from CBA's move yesterday to take an 80% stake in Aussie home loans. And I guess if we have a look at this mortgage space, what we are still seeing is a very difficult credit growth environment. So the bank's looking at acquisitions perhaps to try and boost market share. And of course, CBA's acquisition of that Aussie stake allows it to compete with NAB's UBank or Westpac's RAM. So it does look like the Big Four certainly interested in that stake. Macquarie was another stock which did well today, reaching a 52-week high, up by 2.5%. Not surprising given that we have seen market sentiment quite high. So those companies and stocks leveraged to the market environment doing extremely well. FKP Properties, another one which reached a 52-week high today, up by 6.6%. There were some baffling movements as well. We saw Oz Minerals down by a massive 9.8%. No news out by the company. Other copper miners weren't impacted, and the volume around about 6 times that we saw on Monday. So that was a bit of a strange movement in the material space, but all up a pretty good day for the Australian share market. In the next 24 hours, we're really going to be watching the Bank of Japan. It started its 2-day meeting today, and all eyes on whether we will see an expansion in that asset purchase program. So altogether, a pretty exciting day for the Australian share market. Some good volumes going through and a fresh 17-month high.
Julie, I mean, if you had to try and nail it down as to why we did see a positive close, I mean, was it the World Bank China forecast? Was it people jumping in on some stocks they thought maybe were sold down a little bit early on?
I have to say that the US performance was very impressive overnight, and it looks like the market really falling on from that very strong lead that we saw from the US stock market. We've also seen those material stocks continue to run higher. So stocks like BHP, Rio, Fortescue really supporting this market gain. And we've talked about this switch from potentially income stocks into growth stocks, and there are slow signs that perhaps this idea is starting to gain traction. Earlier on in the session, we saw sectors like the telecom sector in the red, although by the end of the session we did see a positive performance out of Telstra and the telecom space. But it's really this material space which is supporting this rally that we've seen on the Australian share market, with the Australian share market reaching the highest levels that we've seen this year so far.
Charts are showing on the broader index?
The Australian market's clearly in an uptrend now, so we are targeting that 5,000 point mark. There is a resistance level just under that 5,000 point mark, and then it looks pretty clear to 5,200 points. So things looking very good. Also, the other positive thing about the market this week is that we've seen volumes holding up, and that's despite it being the week before Christmas. Usually we start to see some of these holiday volumes really start to filter through, but when we are trading more than $4 billion a day, that's pretty positive for this time of year. So the fact that we are seeing rises on relatively strong volumes is a pretty good sign, and it's a show of the strength of the move that we are seeing at the moment.
Take that, as well as obviously people reacting to what the charts are showing, but on a fundamental, if you like, basis underpinning further gains in the market, albeit maybe not huge movements.
Absolutely. This is what the market is suggesting at the moment, and you only have to look to gold to see that the market has these expectations around growth. We have a look at gold. Gold's really been helped along by quantitative easing over the last few years. During QE1, we saw gold prices up by a massive 73%. QE2, we saw prices up by around about 20%. But since QE3 was announced on the 13th of September, we've seen gold prices trending lower. And of course, QE4, which was announced on the 13th of December, overnight we actually saw gold prices reaching a 3-month high. And as John mentioned, one of the key things that we are seeing at the moment is this move away from treasuries into equities. And as treasury yields go up, that makes gold a less attractive play. The gold play was also always going to come under pressure once we saw the possibility of growth in the US and of course interest rates rising in the US. And now that possibility is now starting to be priced in by markets. We are seeing gold prices coming under a bit of pressure. The gold mine is doing pretty badly today. If we have a look at the gold index on the Aussie market, down by 2.5%. So the gold mine is underperforming the gold price, but we did see some pretty big moves there. And I think that's tied into the growth expectations that the market's starting to see for 2013 and 2014. And that's a very positive one. So a safe haven asset like gold, very much out of favour at the moment.